Hello, investor and trader. Welcome back to an episode. So today I did a little bit of day trading. I traded Skyworks and Moderna. Both of these stocks kind of downhill, right? Because I was catching a falling knife. But Moderna got me a little bit, and I win on Skyworks. End of the day with 441 bucks. That's not a bad Friday, because normally my Fridays, my day trading sucks. I tend to have a red day on Fridays. But this video is not about that. It's about is Peloton a buy? Because as you can see right here, today it's down negative 35%, which is quite significant for a blue chip. This is not a penny stock. You know what I mean? So yesterday, let me zoom in a little bit. When they released that number after the market, so this is the first 5 minute candle after they released the numbers. As you can see, it went from 86 all the way down to 72, bounced up to 74, a $2 little bounce. But first red candle, right? Remember, you have to wait for the next one for a confirmation. So that's why I did not buy this stock yesterday. So then next one comes. Notice this one is a solid red, right? Lower high and lower low. Well, let's wait for some more candles. Nope, not good. Nope, not good. Okay, so first green candle shows up finally, right? Well, we need a higher high, right? Let's see. I don't see it. Nope. Notice right here. Look how long it is. This like what? I don't know, an hour or more, right? Because this is 5 minute candle. So over an hour, this stuff has really no bounce. That's kind of give you a dead giveaway. Oh man, today, well, if you talk about this time right here, so it's tomorrow, right? Which is this right here, in the morning. It's gonna be an ugly day, and it was an ugly day. Look at this, down 35%. So let me zoom out a little bit, easier to see the bigger time frame. So the question is it a buy? Like a dip buy. You know what I mean? Because we look at the daily, it's a huge gap down. Now you must remember, cheap stock can become cheaper. Just remember that, okay? So let's just quick go through the financial statement that they released, the 10Q. So I found some red flags right here I want to share with you guys. Just disclaimer, I don't hold any Peloton, but if you are, you should be reading this too. All right, so you can see right here the cash, right? It went down, and it went down a lot, right? You see that in 3 months they burned like more than half of it. Like what? That's not good. I like a company that increase in cash as time goes on, not decrease. So that was the first red flag. What else I can find right here? Right here too. So last year, right, the products they spend 300 million plus, or make it 364. They make 600, almost double. But notice this year they spend 441 million, only make 501 million. So it only increased by what, 10%? No, 15%, 13%. This like almost double. This is, you know what I mean? So they have decreased a lot. On top of that, right here too, the operating expenses right here. Last year they made almost 70 million. This year they down 360 million. Like that's a huge miss, you know what I mean, compared to just a year ago. So you have to ask yourself what happened. Well, it's kind of obvious, right? Because the economy is opening, so not a lot of people want to buy their expensive bike because that bike is pretty expensive. You can see the inventory. They didn't sell as much bike. In fact, their inventory increased. You see, 900 million, now it's 1.2 billion. So I think the story for this stock has been changed. I see a lot of red flag for this company. So on top of that, it's such a high evaluation still. I mean, we're talking about almost a $20 billion company. Well, today is 16 because the massive drop. It was over 20 billion yesterday. So, and look at these right here. These are pretty red, right? They are not, these are pretty bad numbers, in other words. So, is it a buy right now? Honestly, from my 2 cents opinion, this is not the type of company where I want to invest. I would trade it, but I would not invest in it because just from a technical standpoint, which I'm gonna address right now, from right here at the bottom of the crash, right? I'll be prior to the crash, it was around $30 stock, 35, something like that, give or take, and then it just had a massive run up from 30 bucks all the way to 170. That's huge. Well, what go up fast got to come down even faster. So don't be surprised if this can go even lower. So let me draw some technical key point right here that we might see in the future. Well, let me go to the daily. I think the daily would be a little bit better. Yeah, it doesn't matter what color it is. I just want to draw some lines. Again, this is my opinion. Take it as a grain of salt. I'm not a financial advisor, but this is what I see from a knife catching standpoint. Cause I like to catch stock on the discount, but not when the fundamental of the company has been changed. I think it has been changed. The business model is not growing as fast as expected it. In fact, I think they said that next year they're gonna miss by several $billions of revenue. I think Wall Street expects 6 billion, and they expect to make 4 billion, something like that. That's not good. That's a huge miss. Now, if you're a shareholder, you should be aware of this. I'd rather cut my loss now than cut my loss more, right? Or average the cost down. That's one way of doing it. So these are the next support I see here. So 50 is the next one because of these previous price action right here. Remember, first red day, I talk about that. Do not buy on first red day or first major gap down or something like that because it tends to go down. Making today is huge volume, is over 83 million volume. Normally around 8 million, 7 million in terms of the average volume. So today is a lot of selling pressure. No wonder today you can see there's hardly any bounce. There's some bounce right here, but it failed. It did a little divergence right here. So those that understand divergent convergence, those are very popular. If I can draw some trend line right here. And then here. So what does it mean when the stock double top but RSI is lower? Well, we can go here. Rsi Conversion Divergence is like a kind of confirmation, kind of. And we can see some examples. What does it mean, you know? Bearish. So the stock price doubled top, right? Meanwhile, RSI is lower high, right? If we go back to the chart, double top, RSI. Oh, there we go. There, bearish divergence right there. So from a technical standpoint, average sense here, it's just down from there. I mean, these are micro bounces, it doesn't even count, and it's still down. So if you look at just the daily itself, it's not looking good. And remember, we need several more candles, right? Like how I would day trade. Remember, I always said the first 5 minute candle I would wait. I don't care how high it'll pop or how low it'll drop. I need another candle. So is today a good buy for investors? Well, it depends how you see this company. As for me, I'm not jumping in. You know, if I do jump in, I jump in like small increment because I can see this stock gonna tank more, especially in if it break below 50, next stop around 30, 35 prior to the pandemic. Remember, this again, the numbers they don't lie, right? Number doesn't lie. I mean, this company is struggling right now from operating standpoint, from 70 million positive 70 million down to negative 365 million, and the evaluation for this company is 16, 15, 16 billion dollars. I don't know, man. I think you're overpaying for this stock. So that's just my honest opinion. Well, you might ask, what kind of stock would I like to buy then for investing? Well, if we go here, another website I like to use is Stock Guru. It's free. You have to pay for it. And just look at this chart. Very easy to do. You don't need to look at deeply into the financials and see what's going on, right? At least I understand a little bit, but just look at the graph, the pictures. What do you see? Revenue is increasing, debt is net income is negative because it's still a growth company. But then you see here, look, that's high debt, isn't it? And look at this right, operation. This is the most important thing right here: operation cash flow and free cash flow, because other numbers they can manipulate. And talking about the accountant, they can manipulate, but they can't manipulate cash flow and stuff like that. It makes them harder to manipulate. So this is not the type of stock I would like to buy. The stock I like to buy is stock like this for long term. Adobe, for instance. What do you see right here? See, I like stuff like this. where the revenue increased, net profit increased, right? And these, of course, increase. This is very important. Cash flow and cost operation and stuff like that. If they pay a dividend, even better. And especially over here too. I want to see some green. I don't want to see like when they have no ROIC. These are these right here. When you go to Finvest, these right here, the return on equity and stuff like that. So this is like the type of stock I would invest in. But am I gonna buy right now Adobe at this price right here? Heck no, because it's too high. You buy on the rebound, right? Sorry, on the retracement. So another stock I like, for example, is MED. Same thing, same story, same graph, isn't it? Going up over time, you see? Low in debt, that's which I like the most. I like company with no debt or little to no debt. And look at this. But look at the return on equity. Oh my God, that's so sexy. You see what I mean? So this is the type of stock I like to buy. Now it's on the now as you can see, it's on a retracement. This is where I like to buy, and I did buy some. You watched my previous video. I did sell a little bit, but I still have majority of my share. I'm gonna sell some of my shares. But that's the type of stock I like to buy. A profitable company, and especially fit all these criteria. It is a must for me to invest in. If not, you are taking high chances, and especially you miss the boat. I'm talking about like during the run up. Right now it's kind of like behind the mountains, kind of very similar to these kind of stock right here. All these Corona stocks, see, massive run up, now back down. Massive run up, now it's going back down. Massive run up, back down. These are all growth stocks. They're all very similar. So nothing wrong with investing in growth stock. Just know your risk to reward. You know what I mean? Same thing for here. There's a big gap here too for check. Look at that. Very consistent, and boom, back down because of the coronavirus. Again, I just give you some examples. These coronavirus stocks. The only one I have not seen that dump yet is DocuSign. It's still holding pretty good. Earnings is coming up next month, I believe. I would definitely check out the numbers because I truly think this stock, just like Peloton, is overpriced for investing. For trading, now that's a different story, Trading, you always know your entry, your exit, and your stop loss. That's the key thing. But for investing, you don't use a stop loss. You either ride or die, right? Unless the story has been changed. For Peloton, the story has been changed. That's why the entire day you see nothing but selling pressure. Sell, to the point where down negative 35%. It's very rare to find a blue chip down this much, because this is like a penny stock, you know what I mean? Down this much price action, for my honest opinion. All right, so take it or leave it. If you're a Peloton investor, good luck. You sell out your position, I would not blame you at all, because I think the story has been changed. People are not going to buy that expensive bike anymore. They can go to a gym, right? Around what, $20, $10 a month in the gym membership. So again, the choice is yours to invest. As for me, I am not investing in this stock or intention to invest in this stock. However, I would trade it though. All right, see you guys in the next video. Bye.